Hi everyone, I'm Alexander of Trader Help 101 and help stock traders learn the psychology of risk management. And today we're going to talk about 5 important topics to practice in simulator trading. Now, sim trading, demo trading, virtual trading, these are all fake accounts to help you practice and become very familiar with trading. A lot of traders just jump into real money trading and they get hurt. Other traders rush out of sim trading and they start trading with live money and they get hurt. Now, trading is a performance-based activity. And just like an athlete, they're going to practice often and then transfer that knowledge over into a live game environment. Now, you will never be able to replicate a live game environment, but that does not mean that the athlete should not go to practice. So make sure you're going to practice and you're practicing a lot. Let's go with number 1, practicing good risk management. Every single mistake somehow a trader makes will always lead to breaking risk management or not having a solid risk management plan. And risk management is very intimidating, it's fearful, and traders don't have enough knowledge. So a lot of my videos is to help you avoid costly mistakes. So having a good risk management plan, right away, a lot of traders say, hey, I'm only going to risk X amount of dollars on a per trade basis. But we're going to take this a little bit deeper. We're going to account for a losing streak. And that's the difference between trader A and trader B. Trader A accounts for a losing streak, and every single trader goes on a losing streak. So your risk management plan must account for that. So for example, if you're risking $500 per trade and you go on a 7-trade losing streak and you're down $3,500, are you okay with that mentally, emotionally, and financially? If the answer is no, then you need to reduce the risk on a per trade basis, let's say to $100. Now, if you go on a 7-trade losing streak, you're going to be down just $700 and you're perfectly fine mentally, emotionally, and financially. That's the very first step. You must account for a losing streak. And once again, every single trader goes on a losing streak. The difference is one has a solid risk management plan. Number 2, if you go on a losing streak, you can take some time off. That's part of having a risk management plan. Knowing that your emotions, you're not in sync with the market and you need to wait until you recalibrate. Say, you know what, I'm going to take 2 or 3 days off. I'm going to take the day off. I'm going to take a week off. Just reassess. Maybe go, once again, if you're trading live money, go back into your sim and just practice a little bit and get acclimated, get back into the rhythm. The other thing you could do is reduce your size and reduce how often you trade. Maybe, let's say you're trading, 300 shares. Maybe reduce it to 100 shares. Maybe you're trading 5-7 times a day. Maybe reduce that to 2 or 3 times a day. Maybe you're trading 5-7 times a week. Once again, reduce that to 2 times a week. You have to have all these rules in place because you want to stop the errors, stop the losing money, and have a foundation on how to recalibrate. And all traders have these type of rules. So make sure that you're practicing this in sim, and that if you're trading fast moving stocks, maybe you want to trade slow moving stocks. Maybe you have too many open positions, right? You want to maybe now have from 5 open positions lower down to 1 or 2, and just slow down the frequency and the speed at which the losses are occurring. All right, let's go with number 2. Learning your trading platform. Super important. Get your broker's phone number, email, any live chats, because you want to be able to communicate with them as fast as possible and as efficient as possible. If you're having problems with your platform and you need to exit a trade, especially exiting a losing trade, you want to be able to reach them as fast as possible, and they can help you get out of that trade. After that, you want to be able to understand how to enter trades, how to put in stop loss orders, where's your open orders, your portfolio, how to implement certain indicators, certain studies, and just really get comfortable and confident with your platform. YouTube is a great resource to help you with that. Thinkorswim is an amazing platform. They're usually top 3, top 5 in trader platforms. And broker fees nowadays are very low. It's very inexpensive to trade, so don't worry about that. But you can always call your broker and see if they can lower the trading fees. So make sure that that's in place. And once again, just go to YouTube to learn your platform. Creating and executing your trading plan. By far, a lot of traders don't have a trading plan because trading is very easy to access. So it's very easy to just open up your computer, start trading, and not have a plan because you're very anxious to start trading and you're not patient enough. Create a trading plan. Click the link below and email me and put trading plan in the subject line, and I'll be happy to send that over to you to help you plan your trade and plan your risk. You have to say, okay, when the stock does XYZ, I enter. When the stock does XYZ, I'm going to take profits. And especially, I know how much I'm going to risk, and I know when I'm going to exit a losing trade. This is all planned before you enter any trade. And that's super, super important, because if you don't have a trading plan and the stock market is a moving target, and you don't take into account where you're going to take and make certain decisions, then you're going to freeze when it gets there. It's going to bring up a lot of emotions and a lot of indecision, and you don't want to do that. You want to have the game plan already before you start the game. All right? Training your emotions. Super, super important. It ties into 1, 2, and 3. You're training your emotions. You're training how to deal with risk, how to deal with error, how to deal with unknown outcomes, how to deal with a moving target, right? You're trying to hit a moving target. You're placing risks. Are you having, let's say, performance anxiety? Are you stressed out? Are you nervous? Are you fearful? Are you greedy? Are all these emotions paralyzing you from making certain decisions? These are all the things that you're training in simulated trading for you to at least, like they say, tap your feet in the water to see the temperature. How do you deal with that? Everyone deals with risk different. Everyone deals with making mistakes different. And we also have to analyze what is a mistake in trading. A mistake in trading is not having a trading plan, or not following a trading plan, or just trading whenever you want, whenever you feel like it, right? That's a mistake. Another mistake in trading is not losing money, right? A mistake in trading when it comes to a losing trade is losing more than you planned for. That is a mistake. If you plan to just lose, let's say $500 in the examples we've been talking about, and now you lose 700, 800, 1,000, 1,500. Now, once the loss passes $500, now you made a mistake, okay? And then what type of processes or procedures do you go through to reviewing your emotions, reviewing mistakes, and implementing positive solutions, right? You don't want to get into an emotional funk where you're beating yourself up, having a lot of negative self-talk, because that's not very productive, that's not constructive, and that's not the way to help you continue trading and having a positive outlook. You want to be able to be enthusiastic. You want to be able to have a solid risk management plan. That is all going to help you with your emotional and psychological state. So make sure that first you have a solid risk management plan, because your emotions are really, really going to be intense and stirred up if you lose big. And it's a lot harder to get through those mental obstacles if you lose big than if you just have small losses. It's a lot easier, and then you're following your trading plan. You build accountability when you have a trading plan, and it reinforces a lot of good habits for you to have a long-lasting trading career. Now, number 5, trading different market environments. This is by far, especially the making of this video, we're in a bear market. The market is moving very fast, very volatile. Stocks that don't move that much are moving a lot, and stocks that move a lot even are moving even more. So you're practicing, right? You're practicing on how to trade these type of market environments. Some of these market environments don't come around too often, and you may have to wait years to trade different environments. So you might, once again, trade less, trade different stocks, size down in your position, and all this is practice, right? A lot of your strategies may be performing differently because of the market environment, and this is something that you have to go through as a trader, because you may feel, you know what, I'm making a lot of mistakes, or what's going on with my execution. And no, it's the market environment makes certain strategies outperform or underperform, and you're going to go through these rough patches, and you have to go through these rough patches and digest and come up with positive solutions when it comes to everything about your trading. You're learning a new skill set, and you're learning a lot about yourself on how to interact with the market. So make sure you're practicing these 5 important topics to develop you as a trader and to make you a very positive mental trader. It's important to have a positive outlook in trading because it just brings a lot of stress, a lot of anxiety, a lot of mental obstacles, and you need to understand how to properly solve them in a positive way. Book recommendation: Unknown Market Wizards. This book talks a lot about traders that are unknown to the public who are making millions of dollars, and you will see that a lot of their rules and a lot of what they talk about is having proper risk management. So thank you so much for coming to today's lesson. Make sure you trade safely, and I'll catch you later. Bye.